Hey, profit takers. You're welcome to the More Wins Forex Signals weekly trade review for the past week of 20th to 24th of March 2023. We're looking at a few trades we took in our signals group, and we're doing this so we'll be able to um, um, we're looking at reasons why we took the trade we took, so that we journal our trades basically as professional traders, and we journal. Why do we journal our trades? So that we're able to learn from what we took, both the ones that are profitable and the ones that aren't profitable, so as to keep at doing the things that will keep us profitable, and to have a new perspective of the ones that didn't turn out to be profits, to give us profits rather. Now, when we look at this, we would look at a few setups, and especially those that give us textbook setups that gave us gave us good profits at the end of the day, and the ones that gave us a hard time. We had some fairly uneasy trades, so to say, because we had to wait and wait before price either hit our SL or went profitable. Now, why are we doing this? We are doing this because we want to gain confidence. Looking back at the ones we've done that we did and that we are profitable. Of course, we learn by repetition and rote. And by that, we gain confidence. By repetition, we gain consistency. By repetition, we gain and improve our discipline by repetition, because the mind naturally looks at what is familiar. The mind flows with what is familiar. And what's unfamiliar to the mind sees as a threat at some times. It looks at it as something to be feared because it doesn't understand what those patterns look like. So to help ourselves, we are humans and we have a mind that works for us. So we ensure that we go back and look at these things and we look at things that gave us profits. So we do them again, because the markets basically are full of repeated patterns. The patterns, there's nothing new in the market. The same patterns you saw 10 years, 20 years ago, they still repeat themselves. And that's how we've learned so far. We've looked at those repeatable patterns, studied them, and looked forward to seeing them in the future. And that's how professional traders have made profits along the way. Now, for this video, I want to look at the subject trade management. I want to delve into the business of the day. Now, trade management, what's it all about? It's the act of supervising, the act of making and keeping compliant a trade to conform to the goal, the business, the objective of being successful by following a preconceived or pre-arranged route. Very simple. What I mean by that is just there's a plan, there's a route to get to the goal of being successful. And we manage the trade, we monitor it, we supervise it to ensure it follows that same route to get to our profits at the end of the day. Now, trading is a business and we should treat it as such. Because it's a business, every business is out to make profits. And we as Forex traders also look forward to making profits at the end of the day. It's not a game of chance, not a game of being right with predictions, it's not a prediction game. Basically, everybody's in this to make profits. And so why do we do a management or manage our trades to ensure they are profitable at the end of the day? Now, of course, there's nothing set in stone in Forex. There's no 100% strategy. So what we do at the end of the day is to ensure we're able to maximize profits and minimize the losses. Because at the end of the day, if the profits are more than the losses, we'll be profitable. But if the losses are more, we keep depleting our capital till we get blown out of the market. And basically, your capital as a trader is your invitation to the market. If there's no capital, you just be demo trading for years on end, and you'll be just enjoying virtual victories and virtual losses. basically. But when you have your capital, that's your invitation to come to the market. Markets are just like a ball game, a ball dance. Sorry to say, yes, ball dance. And your invite to that ball dance is your capital. And you watch market participants dancing the walls, doing the rondo, and what have you. So we manage our trades to ensure we get profit. So what are ways we look at during managing our trades? First of all, every trade needs to have a target, which we usually say our take profit, and a stop loss. That's the price above or below which we don't want to take any losses anymore. Our take profit is the price we are willing to, close our trades in profit. That's the first stage. Going forward, we learn to protect our positions by moving our stop losses as we move into profit. And one of the first things we do is we move our stop loss to break to entry to be at break even. So just in case market decides to reverse on us without hitting our targets, we are literally risk free. The trade has become a risk free trade, having moved a certain number of pips into profit, and we just move our stop losses to the entry area, ensuring that if market comes back to the entry, we are safe. We haven't not risked or lost anything at the end of the day. Part of our trade management is we look at trades, and for instance, there are some trades we look at it, we look at the examples that we took based on the signals we took. There are some moves that got to somewhere as good as 5 pips to profit, having moved 70 pips, 60 pips, 80 pips in some instances. But while we were looking at it, it started reversing. For me, of course, we have a rule of thumb here that we just move our stop losses to entry when price moves 20 pips into profit. But I also want to say, once price moves, you're watching your trade, you're monitoring the market, monitoring the trade as it moves, and price moves very close to your tip. You're looking at it, just staring at it, they take profit and not hitting it. You could close it at that point. You stand more to gain. For instance, price has moved 70 pips, and your target is 80 pips. At 70 pips, you are almost as good as a very good winner. You could take your profit there, or you move your stop losses way into above or below your entry area, so it comes in more than break even. So if price moves against you, you are booked in between 20 or 30 pips profit because price are really moved, a great deal into profit. Those are things we have to look at because basically we are not, nobody's out here to predict or to be right all the time. But once we can see that we are profitable, just booking your profits, and at the end of the day, you don't need to wait as long as you're there seeing it. That's for sure. You're seeing the market move. And I want to say this also. It's good to be available to trade. If you're not emotional available, you're not physical available, it won't be too nice to trade. You could set out a time frame for yourself, 4 hours, 5 hours, and no more. After that session, maybe 4 or 5 hours you've given yourself, you can shut down for the day. If there's no setup, fine. That it's fine not to have a setup, and you just walk away from the market. Now let's look at a few examples. Now let's just begin with the most recent one we took. This was Friday. I'm looking at the 15-minute time frame now. This was Friday. We had a move that came down all the way from this point. I think I gave I think that was on a five minute chart for me. I was looking at the 5 minute time frame rather. I was looking at the 5 minute time frame. Let me see if I can get there. Quickly get there. Now, now on the 5 minute time frame that we came on to check, I saw this. Now we saw this. I saw this, and I put out the signal. I saw this move gave us a nice M, and we checked the same thing. Was we had a bit of a hidden divergence on the TDI below the market baseline, and price started dropping. So I think we entered that move around here. It was 1988 was where I gave that signal, and we started dropping. Price just started dropping, and we came close because we could take it at 19. Am I looking at the right? I'm not sure. Let me go back a bit. I think this is the move. Yeah, this is the move. Yeah, we came down this much. Yes, we had this close. Good. We had a close below the Mayo on the 5 minute time frame, and a very strong bearish candle, vector candle, so to say. And I I was expecting price to go way down to the 1980 area. That was the TP we gave. But price came and gave this beautiful hammer candle, but it was about 10 pips short of our target and still reversing. So in this case, having seen this hammer and at the close of this candle here in the 5 minutes, we were already, or at this point, we were still 30 pips up in profits. One could, at this point, close the trade, take the profits here, instead of waiting for it to come and hit our, having moved our SL to the entry point, instead of waiting for it to come and hit the SL at the entry to get to be closed out at break even, we could take our profits at this point. And the next result was market rallied far up. Now let's look at it from the 15-minute time frame. So there's some things I wanted to look at while we're looking at the trade management. Now for this particular trade, Friday was really gorgeous for trading. We had beautiful moves and we took profits almost at every turn of the market. Now, if you look at the range, this is the Asian range. I'm using the trading view app to do this, but this is not my trading platform. My charts are really messy because I have so many things there, but they all have what they do for me, you know. But this is to make it cleaner and easier for us to understand. Now, if you look at this, with this move, already price was bullish. We had a bullish bias. Now, what did we have? After price came out of Asia, we had the test of the water, the 50 EMA. Price made this big move downwards and started moving upwards. At this point, I was sure we're looking at AW, and this is more like a type 1 bullish pattern, London pattern, and we saw price rally up to the top, almost about the top of yesterday, about yesterday's top. Now, the next we saw again, that beautiful setup we had here again, which we took, was this beautiful M. At this point, when we saw the move here, we took this trade around 1998. I didn't wait for this close. Saw this hammer, inverted hammer, so to say, yeah, and looked out for the drop, and we dropped really good. I was expecting price to go all the way to the 1982 area, where it refused to get there, and stalled at 1985. That was where we had that move, almost 1986 area. It stopped there, and we had to quickly take profits at the 1990. I had to send out that message for us to close at 1990. Price now had a small pullback, yeah, but almost to our entry, initial entry, and dropped again. At this point was where I called it a day because we had already taken this, we took this move upwards, yes, to 1990. Yeah, so we took about 80 pips from here, and we took this other drop. Now, at this point, I said, okay, we've had some uh, profits for the day. So I said, let's call it a day. Now, there are other things I want us to look at as we go along. Now, let's look at two more trades, I guess. Yeah, two more. Now, on Thursday, We were quite profitable this week, But on Thursday we had a move where I saw this move in Asia. I put out the signal for us to buy up to the way up to 1990. That was my target. That was about for 190 pips. But when we came out of Asia, just as we were coming out of Asia, I saw price do this double top here, the 1983 area. Already that was about 120 pips, yeah. And we finally caught as in closed out for 60 pips, yeah, 1977, and waited for this drop. The drop now finally took so much time. Yeah, in this trade, we now had this drop, but at some point I had to say we should just close out because price started moving upwards. So I was expecting a continuation. We took so much time, to come down this way, but the news came out I think just before New York, and we had this beautiful drop, and we continued upwards, up all the way to the 1990 area, and we also had this trap. I call this a trap move. We saw price just moved rapidly to the top and had a very um, big bearish candle, and we started got into a sell mode for Friday. The last I want to look at is GBP USD. Now for GBP USD, I think we took a trade on that was on Thursday. Yeah, I'm on the 50-minute time frame. And for Thursday, I saw the move here. I was looking out for this drop. I saw this beautiful hammer here, and we had this, you know, uh, TDI signal here. Price breaking below the lower bound of the Bollinger Band. So at this point, after having seen this hammer, I gave the signal for a sell, and the sell came in beautifully. We had this beautiful drop to this point. That was a winner for us. Basically, we were quite profitable. So what I'm trying to show us the patterns. This is one thing. This is one of the bread and butter of the PTMM strategy. The pattern. We had a beautiful M here, and this drop, dropped to this area. This is an order block. Just dropped right there, and we had a range. Price now, rallied back up. So yeah, it's it's a beautiful thing to be able to spot these patterns and to take them, and also add trade management to this. Now look at this beautiful trade now. If, for instance, we didn't look at taking targets at this point, maybe we extended targets down this way, we would have been stopped out when price went back, even be above our entry area. Maybe we would have been stopped out for break even, or maybe price would have shot up this way to give with this move upwards to even take out our stop loss somewhere around here before giving this beautiful drop. So based on trade management, we'll be able to look at good places to take our targets and be able to take targets once we see price talk like this. We had this small range here, and at this point one should know, having the TDI also as a confluence, being at the lower end and at the 32 level, and it's even giving us somewhat small divergence here and started going back upwards. So before even this vector candle, one would have even taken profits at this area when we had this range. And we had the drop, although my target was even before here, so we had this drop from 1.2, we had this from 1.21 uh, 330 area, no, 1.2320 area. We dropped into 1.2295. Yeah, and price dropped way beyond that, a little bit beyond that, before we had this movement to the upside. So I don't want to take too much of the time, but this is just a brief overview of what we did for last week. Of course, there are the ones that didn't give us there's the one that gave us a stop loss. I think that's the one I looked at in gold. Let me just show you that in the GFA. Yeah, this is gold. Yeah, this is gold. Now, this move I was talking about that we waited quite a while. I would have kept our stop loss at this point, but I kept the stop loss at 1980. And when I saw price trying to go back to the upside, I now had said, okay, let's take our just cut the losses because we entered at 1976, and I had to take off the trade at 1978 for minus 20 people loss. Price eventually went to take out the stop loss I gave for at the 1980 area, went as high as 1980.79, and we had this drop finally. Now, in this trade, I was still correct, with the direction, but it ended up a loss because one, I had to cut losses because this is a business. I'm not out to look for trophies for good predictions. So I had to take out a small loss there, and also we had this drop. And basically that day, I think I wasn't so available physically to trade. I had to step out of town for a meeting and thought I could do some work on the way, but I had internet issues. I only saw this drop, and when I got access to the internet again, I saw that one had the price had really rallied up quite a bit. But with that said, just to tell you, you need to be available to trade when it comes to trading. You have to be available to trade. And basically, trading doesn't have to be hard stuff. Doesn't have to be hard work, strenuous work. No, we learn to work easy, trade smart. Even in life, we have to. Life is take life easy. Life is easy. Yeah, because there are things we need to put in place and use. We use leverage, and we should learn to use leverage in the market. Use leverage in trading. We'll learn to use leverage in trading. Now, we're bringing leverage to you with this service, um, Forex signal service here on the Morgan's Forex signal service. We're here to give you leverage to assist you to be consistently profitable. Now, the pricing of this is it's so cheap. I put it that way because with the number of pips we make on a daily basis, we structure it in such a way that even if you come in with $100 account and you do your trades at 0.01, very minimal risk. With what we did for this past week, we did about 500 pips for the past week, and 0.01 on 500 pips has given you about 4 5 times your capital, with which you have something to pay for your subscription, and you still have a whole lot to live off of, just in case this is your mainstream of income. And for those of us that have 9 to 5s, that we pursue and have this as a high side hustle, side income, this also could give you good profits at the end of the day for as a side hustle. I also want to say this. There's this funded trader challenge that Victoria advertised for those of us on the Pips on Fire platform. It's going to start by April the 1st, and it's for 5 days. And basically, for those who are looking to be funded on a big scale, you could enter for this and use our leverage. Beautiful. I think I'll be going for that challenge too in April. I'll be there. I'll be part of that challenge. And truly speaking, you could use this leverage, just subscribe to it. Of course, your subscription runs for a month, and on a monthly basis, yes, it's on a monthly basis, but you can use this leverage to win that challenge. I'll be there, participating in that challenge, and the same things I'll be taking in the challenge I'll be putting out here as signals for you. So basically, if you're looking forward to get funded, just register at no cost. I think you could speak with Victoria. I think I'll ask her to put the link of this after this video. You see the link about and how it it should go, you could reach Victoria to know the details about it. But basically, entering for that challenge and using this leverage we're putting out here, the signal service we're putting out here, can make you profitable, get you funded, and you enjoy life as a forex trader. Life is not supposed to be hard. For those who, I know for those who started businesses and they have to use the internet, they don't go about trying to set up the internet, fresh internet, while telecom companies are there. You just latch onto their leverage by patronizing them. Your business goes online. The same thing, you have to use the telephone. You don't have to go and set up a telephone company because you want to use telephone your company. No, you go back and you know patronize there's already established telephone companies and use their leverage at their costs as a subscription. And at the end of the day, you're profitable in your business because they aid you to reach your customers. And that's what we are here to give to you. So with that said, let me not take much of your time. Let's go and prepare. In a few hours' time, we'll be going to Asia for a new week. And remember, this week we're running to the end of the month, we're running to the end of the quarter. And as we're approaching the end of the week, we'll be very cautious trading because, of course, there'll be shifts in decisions, and of course, time zones have changed already. There will be shifting decisions. There might be tricky trades in the market around that time, and we'll be quite careful about them. But with that, it's just a reminder for us to be forewarned and be forearmed against that time. But with that said, I'll leave it off, give it up here, and I think we'll see you in the next video. Bye for now.